Hi everyone, hope you are having an amazing day. So I've started this YouTube channel to share with you some of my thoughts on the current real estate market. So if you are planning to invest in real estate or want to learn more about how you can invest in real estate, this video is for you. In today's video, I'm going to share with you some of the most important things to consider when it comes to investing in a property in Singapore. Before I start, here is a quick disclaimer. The information that I will be sharing are based on my own opinions through my own research and training that I've attended, and they are just for reference and educational purposes only. And without further ado, let's get started. When we are looking for a property, location is always a key consideration, which is why demand for prime location is always high, and it's also one of the reasons that drive up the price of a property. Before buying it, check out what are the nearby amenities. Are there any shopping malls nearby, any supermarket or even schools? Also, where is the nearest MRT station? Commuting to and from work is a big part of many people's days. Therefore, a house with easy access to public transportation will be more desirable. Also, do take note if there's any future major developments around the area, which leads to my next point, transformation. In fact, transformation is probably the single most important factor when it comes to assessing a location. Don't look only at what the area is like right now. If the government is willing to spend money on transforming the area, it's usually worth buying in that location. Here's a quick example. The Singapore government is actually planning to transform Jurong Lake District into the so-called next CBD in Singapore. So here is the plan that they have for that area. They are trying to build like tourist attraction science center over there as well. So this kind of commercial development can also help to improve property values. For instance, partly because of the announcement, those owners who stay at J Gateway will actually be able to earn at least a 200k profit upon selling their property over there. Therefore, transformation may be one of the important factors to look for if you are planning to invest in real estate market. Next, entry price. Do look out for a good entry price. The location can be super good, but if the entry price is high, it may not make sense to buy. Also, please try not to purchase property that is priced so much higher than the current market value with an anticipation that the future transaction will be able to support it. You may do some research on the close by projects and do a comparison of the price before buying the property. Let's look at some examples. So these data are actually real transaction history that I pulled out from squarefoot.com. So these three condos, they are located in District 15 Amber Road area. So I've renamed that as condo A, B, and C. Back in 2011-2012, condo B and C were actually selling at around 1,003 to 1,005 PSF, whereas condo A was selling at 2k PSF. It was around $600 to $700 PSF higher than the other properties nearby. I get it that it was a new launch back then, but the price is too high that the future transaction is unable to support it. Luckily, this is a freehold apartment, so if the owner were to hold a little bit longer, I think the price will eventually catch up and they probably will be able to earn some profit from there in future. And here's a good example of what I meant by a good entry price. If you take a closer look, at the beginning of the launch, the developer was selling it lesser than the break-even price, which is why those owners who bought earlier were able to maximize their profit when they sold it afterwards. But this developer was nice because even after like 2 years later, they didn't increase like the price too much, which is why those people who bought it a little bit later than the rest were still able to gain some profit as well. But just to be clear, do note that not all new launch make money. You will need to know how to pick a good project and enter at the right time in order for you to maximize your capital gain. Next, if you are planning to rent your property out, you have to be careful of where you buy and ensure that there is tenant catchment areas. It would be great if the principal repayments by the tenant is much higher than what you are putting in each month. So some people will check the rental yield around the area before buying it. Here's a simple guide on how you can calculate the estimated rental yield. So assuming that you are looking to purchase a 2-bedroom condo at $1 million, and you're planning to rent it out for 3K per month, and it will be 36K per year. Assuming that these are all your expenses for that year, you have to use 36K minus all these expenses to get your gross income, which is 24K. So I will assume that you will take loan to purchase a property. So you have to take into consideration of the interest rate for the first year as well. In order to get this interest rate, right, you can use the online calculator provided by the bank. And to get your net rental income, you have to use 24K minus this interest rate for the first year, and it will work out to 11K. So assuming that you are able to take maximum bank loan at 75%, and you are planning to loan for 25 years at an interest rate of 1.8%, so the loan amount will be 750K, and these are all your initial payment, down payment, buyer's stamp duty, additional buyer's stamp duty. And you have to take into account of those renovation costs, rental income tax, legal costs, conveyancing fee as well. And you have to use your loan amount, 750K, minus all these expenses to get this amount. In order to get your net rental yield, which is your ROI, you have to use the net annual rental income divided by this total amount, and you will get a 2.5% rental yield for this scenario. Last but not least, you have to determine your exit strategy. When are you planning to sell? How much are you planning to sell, and how much do you want to gain from the property? So you can ask yourself this question before buying that, and don't get over emotional over it, and realize that selling a property can be the right move for you if you want to maximize your capital gains. If you are able to exit at the right time, it will be beneficial for you. Here's the end of my sharing. Thank you for watching, and if you think that this is helpful for you, please help me to like this video, and see you next time. Bye!